What we're going to discuss is becoming a digital CFO. And I look at all the people in front of me today and think, haven't they got enough on their plate already? They've got to look after risk management, financial due diligence, compliance. Do they really have to become digital CFOs?
So, Peter, I think the conversation also, as we happened with my talk and the talk of the previous speaker, is really that the role today has to grow to become a 21st century role, which is no longer part of a vertical, but much more of a transversal level of integration in the organization. We had a similar conversation where we're talking with the innovation officer and the technology officers. I think today roles are much more well-rounded across departments. Because again, finance is, as an example we did in our prep talk, I see this as the blood of the body, right? The arteries needs to reach out throughout the entire body. It's not necessarily an easy task to make sure that you reach out, but there are many different complexities that are coming from the type of distribution of resources we need to have. Today, we need to have a finance that is entrepreneurial enough to understand the prioritization of the project, but also a finance that is not statutory, because a finance that is only preserving status quo cannot really survive under the enormous amount of pressure we have on competition. They're coming in parts of the world where the financials are much more in favor. So I think it's more about a compelling necessity than anything else, Peter.
Okay, Suzanne, you agreed very much with what Mark has said, but you also cautioned about the dangers of throwing out the baby with the bathwater. You were actually saying, let's not forget that business wants finance. We're the honest brokers. We guide them. We reassure them. How do we balance the two?
It's definitely a challenge. I think the danger is in wanting to be, I guess, everybody's friend, which, certainly in finance, you want to be respected by the business. It would be nice if they liked you as well and didn't just see you as the cost-cutting engine. But I think having the right guardrails there and having them understand that there is integrity that has to sit in the numbers, and that's the part that the CFO is responsible for. But at the same time, getting them to understand that you're not the roadblock, you're the guardrails. You're going to help them get to the best decision. And that's, I think, one of the things, aside from technology. So technology is a great enabler, but that doesn't take away from, I think, the core responsibility that you have, and frankly, what most boards will be expecting of the CFO. But it's trying to do it in a way where you can at least engage with the business and have the right tools to be able to do that.
Because Raj, you were telling me we shouldn't be the scorekeeper anymore. I mean, that's an Indian telling us don't take the runs down. But actually, what you're saying also is you've got to broaden your business perspective.
Correct. And I think the view of the scorekeeper is outdated now. So, there is a role of being the, stewardship role and the operator role, but the role of, insights and, being a catalyst for change and driving growth and pushing the strategic direction. That's where that commercial skill is more and more valued, and I think that's becoming more and more important, rather than just the reporting side of things, because they don't give you a forward-looking view of the world. Okay, but Susan, one of the things you said, just said it now, that the reputation that finance has in the business is you're going to cut costs. So when you appear in any meeting, you've got a cost-cutting hat on. How can you win the trust of them that you can see the need to go down that digital agenda?
So the starting point is getting in front of the right people. And I think some of it comes to how a CFO role is positioned in the organization. So where I am, I'm quite fortunate because I'm also responsible for corporate strategy. So often when I turn up and have a conversation, the first point is, which hat are you wearing? And the answer is both. They're one and the same. You can't have a good strategy if you don't have a good financial plan that sits behind it. So getting the seat at the table is the first part. The second part then is spending time with people to say that you're trying to help to solve for a yes. And you're absolutely right, the insights and the analytics that you can take from that, but helping them get to better business plans. My starting point normally is, at some point you're going to have to come to me for money. So come to me having spoken to one of our business partners where they've actually sat down with them and you framed it in the right way. So then it's much easier for me to give you a yes.
So you're giving them some financial acumen that enriches them when they're sort of preparing proposals for the organization.
And that I think is a very important part of the CFO role, because not everybody in organisations thinks the way we do. They don't look at the face of a P&L or a balance sheet and interpret something from it. So if we can help them get to what are the right metrics you need to focus on, what are the things that are going to sell what you're looking for, in terms, because a lot of the time it's funding, right? I often get the phone call which is, have you got 5 minutes? That's normally followed by, yeah, sure, how much do you need? So there's an element there of us helping to guide that conversation. And in some respects it becomes a bit of an easy win, because it means by the time I get something back, it's already in the form that I'm expecting.
Mark, you were talking to me about the need for CFOs to embrace the startup mentality, where people don't see their position as a specific role, but they look broadly in the duties they've got to perform. Could you outline a bit more about that?
Yeah, sure. One of the things that we learned in the last few years from the startup world is the idea, for example, of minimal viable product, right, and pilots, as a way to determine validation from the market by bringing something to the market so that we can learn. I think what I was referring, Peter, is that sometimes we think that by controlling the environment of our decision in the office, we understand how the market functions. But the market always outsmarts us. It's today too difficult for us to actually use economic or financial models to predict exactly what will happen. Namely, most important economic projections are largely off the target. And that's because simply the assumption you make in an environment which is quite controlled doesn't take into account what could really happen. So I think the idea of the startup is that the startup doesn't have enough historical data to predict the future. So they have to really adapt to the transformation happening on a daily basis. That culture, that if we can integrate in larger organization, I think we're really building roles of innovation or entrepreneurial mindset that I think in this period of time are particularly important. I do tend to agree with also what Suzanne said before about gatekeeping. And it's a subtle balance to find. There's a difference between, I think, gatekeeping and preserving the direction that is strategic. On the other hand, recognizing when the condition that we have originally identified have simply proven to be partially incorrect by how the market is evolving. And if we integrate in a startup mindset, I think we're going to be able to gauge much better than if we're simply utilizing more traditional forecast mechanisms.
Okay, both of you spoke to me beforehand about the fact you're not just a single representation of finance in a business. You lead teams of people, and part of the challenge of being a digital CFO is you've got to bring those people's perspective up so they're on they see the CFO side of the world. Raj, you were very keen on actually the importance of moving people from finance into other parts of the business as a way of broadening their perspective. Could you explain that?
Yeah, I think that it's really important that people get a broader business perspective rather than just a pure financial perspective. And one of the things I like to do with my teams is encourage them to move into different teams, get different skills, whether it's in operations or in marketing, and then when or whether in sales, what could be any particular area, doesn't really matter. But once they come back to finance, they get that business understanding. They see things through a different lens, and they think a broader lens rather than just financial. I think that adds a lot of value. And when most problems or issues that we face in organisations are across teams, so we have to work across teams. You have to understand various perspectives. And I think that's one of the advantages if you can give people opportunities, whether it's secondments or projects or roles in different teams. That helps a lot.
Because I think, Suzanne, we spoke about the fact that a lot of people in finance are very good with figures and data. The world's crying out for data scientists. We're wanting people to analyze what's going on in the business and give perspectives on it. It would strike me as there's potential for finance and data scientists to work together on that.
It's, again, we've probably worked quite closely, having just gone through a finance transformation with our data, so our global head of data, and really looking at as, there's a set of financials which produce financial outcomes, and as Raj said, that's very backward looking. Data, the predictive part, bringing that together and being able to use that to create analytics that might be a little bit more forward looking has been really important for us. Now, that's not a comfortable place for a lot of people to be in, right? Everyone wants to be the owner of the source of truth. right? I can tell you from finance, you know someone, at some point, if there a number has appeared somewhere in a pack, someone's going to come and say, well, finance must have done it, right?
Yeah.
And so there's that danger of, oh God, well, if I let this devolve, if more of the data comes from a global data warehouse, if we've got ESG data that's starting to feed into some of our reports, how do we wrap our arms around that? And I think the only way you can do that is by engaging more closely with your data teams. Now that might be buried somewhere in IT, but you've got to get that right, because otherwise you'll end up with multiple sources of the truth, and that's even worse.
Well, that's conflict and finger pointing and all that sort of type of stuff, yeah. But also one of the things that people talk to me, and Mark, you may have a perspective on this, is one of the advantages of a finance position is you have a horizontal view of an organization and how an organization is operating. And so if you're in a digital transformation, you see the issues that need to be done in different parts of the business to make it more digitally effective. So that sort of capability skill sets, you impressed on me there's more to an organization than just its financial performance, the health of an organization. Could you explain your thinking in that area?
Yeah, so Peter, historically, there were decisions that were made at the financial level that would become the direction that the company would take strategically. But sometimes there are opportunities that are coming from the operational side or to the digital environment that requires a financial justification. It means that, again, the directionality is no longer one-way road. There's way more direction than just simply one. I think finance should become leading and a steward at the same time. Leading in terms that the solid financial strategy is really what preserves organization in times of challenge. But we should also be able to prioritize the business imperative that require financial support. And how do we navigate this environment, I think is what I was mentioning when we were talking about this horizontal and very cross-functional role. One of the reasons why I think that if a CFO, a CIO, a CTO, whatever chief of department, they're capable of working together. They understand that the boundaries in real life about decision and how they have to be prioritized, they're not determined by department. They're determined by much more by the ability to understand the business. And that's what I was referring to. To me, the financial value needs to be larger than just the sum of the parts, which is really what defines organization success in the long term. So that's what I was referring to.
Okay. And Raj, you were talking to me also the health, these aren't just the financial figures. It's, are you attracting the right talent? Your skills there to help the business forward. You have a view and a thought of those.
Yeah, I agree that you need to understand the business and what's going on and underneath. And part of that is obviously the talent that you have and the skills that they need to be successful. Often that requires not just financial skills, and we talked about that a little bit earlier, is building relationships, engaging with the businesses, being able to use the data to ask the right questions, because it's only when you start, the data only doesn't tell you the answer, it gives you a point for where further questioning is required, and that's a really important skill, and the ability to build relationships, analysing information, and influencing and a seat at the table. I think all of those things are where finance teams need to move towards.
But ultimately, if you evolve an organisation, there's an element of risk-taking in it. You can't stay still. You've got to try the new world. You've got to venture forth. One of the things about COVID that everyone spoke about is we were forced to take risks and forced to embrace new ways of working. Yep. What can we learn from those lessons and embed into our practices going forward?
I mean, it's easy to look at COVID and see a lot of the challenges that it posed. I think one of the things it did was sort of upturn things in a way that it forced people to be receptive to new ideas. So I think for any of us, none of us would have thought that, if we had a scenario, I've got a global team, that we would complete a year-end process completely global without contact with our auditors, that we would do a complete finance transformation with everyone sitting in their rooms at home, joining Zoom calls. If you had posed that to people and said, this is something we're going to try and do, the resistance would have been horrendous. So I think actually that change has given us an opportunity to look at things differently. What we now need to bed into that is not the temptation to go back to, but I want to go back to my Workday 6 cycle. I want to know, exactly what I'm doing each day for the first part of the month. And what we've found is with putting new digital tools in, so we've got a full cloud-based ERP solution, we can do things real time and quickly. And that's a bit unnerving for people. If you're used to a cycle, suddenly being able to sit down and get information straight away, not have to wait for somebody, have to close something off, and I'll come back to you at workday 10 when I've got a report I can provide. That's the thing where we've got to skill our teams with the fact that real time is kind of where we're going.
But it's scary for some people who like to be in charge and control and all.
It's scary for CFOs, I've got to tell you, right? Because things are floating out there more quickly. You're getting information back out into the business, and that's the piece where there has to be the quality control and the integrity around it. But once you have that, it's far more empowering. And I'd say for anyone that's got global businesses, it just makes things so much easier. That kind of, digital becomes a common platform. And I said probably one thing I've tried to impress across my team is, our ledger, our ERP, it's not a piece of technology. That's our business tool. It just so happens that technology is the enabler for that. So we own it. There's not somebody sitting in IT that you ring up and say, I need you to do this, this, or this. It's ours, we configure it. It's our tool to use. And I think that sense of ownership also changes people's mindset a little bit.
Mark, that openness to new ideas reflects a willingness to experiment with new things, to try new ideas, do things where sometimes the outcomes are uncertain. How do we encourage more experimentation in our organization to try new ways of working when we don't have the demands of the COVID challenges?
I think, Peter, what we can easily demonstrate these days that doing nothing is much more dangerous than taking those initiatives. And I think what COVID really gave us, there are many silver linings, is that from speed that was also shared before, to the idea of constantly try to rethink of your own role in a market that is constantly entropic, somehow pays off. It's just that the measurement of payoff cannot be on a straight line, which is also the tail of a question he was asking before. During our conversation, we were talking about the ESG. I remember when ESG was a conversation that happened at Davos at the World Economic Forum, but it didn't really cascade down. Today, many more companies are looking at way of assessing publicly traded companies in not strictly financial terms. And that is a combination of changing the measurement, opening up to a larger way of defining value, and investors, which I think is a big component of this, suddenly going after those organizations. But I remember when ESG was, still very pivotal and on the lips of very few. In few months, we've seen this major transformation. So I think, as they say, the wind always blows forward, right? It never blows backwards. I mean, there's always the idea that we have to constantly think about adjusting our organization to the circumstance in which we are. And so as we are in a dynamic environment, taking risk is today probably much more the way of operate than what it was before, when markets were much more established. We used to have, major player followers, incumbents. We have lost the boundaries that we used to have before that allow us to do a bit of the game theory that you could do with finance. We have to be much more related to the fact that everybody has a first mover advantage opportunity, and everybody is sharing systemic risk.
Okay. Mark spoke there about how the investor community is often driving the analysis of the value of organizations, and they're looking beyond the financial results into factors like ESG. You're both working in organizations with heavy trading forms. Is that a nice idea, or is that really how you see your peers evaluating companies?
A lot of the peers are evaluating companies in that way. Our employees are evaluating companies in that way. Are you being socially responsible, and are you investing in the right type of entity? So it's not just the investors. I think it's much broader than that. And you're being constantly evaluated by investors, by employees, by your clients. It's out there, and so obviously it is making a difference.
Suzanne, does that imply, though, that a progressive business is a digital business, or do the two go hand in glove?
I'm not sure how you can be progressive without the digital.
Yeah.
So if you think about what Raj was saying was, markets price everything typically on a forward earnings basis. So it's nice that they get to see what you've produced historically, but those are historic numbers. Certainly with the piece where you're bringing in ESG data, people are trying to predict what are the things that tell me whether that's continuing. How resilient are you going to be in 12 months' time? What digital allows you to do is run the type of scenarios that can give you a lot more confidence around, dare I say it, forecast numbers going out there, lead indicators, things that, particularly if you're a listed company, are really challenging to put out in the public domain. But having the right tools to be able to run those scenarios, have a confidence around them, to bound them, that's the piece where that's really hard to do if you're just sitting there with a spreadsheet. Because you can't react as quickly as you need to.
Okay. Mark, your thoughts on the sort of the metrics that reflect a sort of progressive organisation?
Yeah, I think there's a side of it that defines the purpose over the profits. I think we are rediscovering a much more purpose-driven organization. I remember when we, in the last physical World Economic Forum in Switzerland, it was declared that stakeholder capitalism was now the way forward. And in the way in which you can really measure that is that you're building much more purpose. There's so many important needs the organization actually fill that we like to see this as a way of progressing towards those needs. So the contribution that the companies make into society these days, I think, is a particularly important conversation to make. I think this is a way of measuring that. The other way is really on how these organizations are contributing to build the narrative of the kind of company we would like to see. And most of I'd say the heroes are not coming from the large companies anymore, but they're coming from the small, medium enterprises. They're really building a landscape of opportunities for more and more people. I think it's redefining purposes about what is the future of work. How do we use technology to augment our opportunities? How do we think about maybe using finance to identify the task that needs to be digitized without this automatically meaning displacement of labor? I think there's so many different imperatives in what we call the new digital leader skill set that I believe organizations today should support. And that's one set of indicators that I would use to determine how progressive a company is.
Suzanne, who leads then? Should the CFO be the person leading this sort of transformation of the business, or is it a joint responsibility? And if so, who takes the running?
Look, that's going to depend company by company. I think it's a really hard thing just for the CFO. Now, at the end of the day, someone's got to bankroll it. So at some point, someone's going to come to you and want to know whether it's the right business case, whether it makes sense for the organisation. But again, what that comes back to is if you can work with your peers to explain the reasons why something makes sense. And purpose is an interesting one, right? Because that fits in the intangible bucket for us. And yet it means more and more for businesses. When you've seen the rise of, B Corps, people signing up for Future Fit, those things tell you that larger and larger companies are going to have to focus on that. I think as CFOs, we're going to have to think about how do you value that? I've just gone through an exercise with our foundation where we're trying to come up with something that looks at a social return on investment. So instead of just the conventional return on capital invested or return on investment, how do we turn that into something that means that the foundation can represent itself in a different way? Those are core skills in finance. We've got to find a way to translate them.
Raj, I know you oversee the Balance Scorecard in your organisation, which is the original way that we tried to sort of quantify the non-financial aspects of organisations. What insight does that work give you about how we need to see our organisations?
I think the thing for me is it's much, much broader than just the financials. So financials is one portion, and it may be a set percentage or a range. But things like how obviously the employee engagement, things around how obviously it might be ESG, it could be around customer satisfaction, a broad range of non-purely financial metrics that we go, whether it's profit or revenue or cost. And I think we've got to also realise that it's the whole our stakeholders are all interconnected, and in the sense that it's not just about the shareholder and shareholder return. It's also about your clients. It's also about your employees. It's also about the broader community. And I think when you look at it from that broader perspective and try to then bake the scorecard in to reflect that broader view, you get a different set of metrics that you would have otherwise got than just a previously narrow financial set.
Can you give me an example of some of those metrics?
Things like, obviously for us is, how many of our, it could be things like inclusion and diversity, metrics around the percentage of employees working flexibly, all of those sort of things around the employee side of things. It could be sort of things around your net promoter score if it's around clients, client satisfaction with new products. The number of clients involved in new product innovation. How are you getting, like you said, getting client testing along the way? So how often are you getting your clients to help you in that process as well? Because that's part of that innovation process.
Mark, one of the biggest challenges most organisations report is the war on talent, getting the right skill sets. Are some of those medium-sized organisations winning that because they're winning this argument that they've got a sense of purpose about them?
I think so. I think that today talent is much more of a distributed future than a concentrated one. I find it personally exciting that we now have the ability for talent around the world to tap into the value proposition of firms globally. I think it reinforces the idea of being a global economy, just localize that effort, especially when you have countries that are introducing the digital nomad. So like programs in which you could physically be in your own country, but be legally hired by a company somewhere else. So I believe so. I think we are about to see a transformation of the labor force. The digital talent is by design already very future fit. So it doesn't fall in the pitfalls of those kind of labor design that are likely to be displaced by technology, much more resilient and much more gender neutral or gender friendly. I think really so that we are about to see a very different sense of what the workforce of tomorrow will look like. We have to strike a balance, Peter, between the need for social dynamics to still happen. The workplace is not just where we have a job. It's a place that equally fosters a cultural development and where technology somehow becomes a means to an end for something that we now can bypass, like, for example, visa or the physical relocation of families and things like that. So definitely many different things to be, many stones that needs to be turned yet. But I would say a phenomenal opportunity for small, medium enterprises to tap on talent that historically was not coming to them.
One thing we spoke beforehand about, Mark, was the area of governance and the idea of governance being a way of starting to give some scope for leadership and responsibility in an organization. Could you explain your thinking there?
Yes. So I think going back to the conversation on purpose, if the purpose of a board of director is to define the interests of the company, but equally to oversee the shareholders' interest, when you're shifting that over to stakeholders, the governance of decision-making is equally changed. The incentives and the dividends change. You start looking at incentive models not to support the financial performance exclusively, but you start looking at the governance to support the long-term benefit. That goes both financial and non-financial, as we mentioned before. So the redesign of governance is another of those areas that I think COVID will have accelerated more and more. One, because we realize that supporting incentive for long-term transformation is much more enticing for people than a short-term financial reward. And second, we do have a problem with retaining our best people, considering what we mentioned just before, Peter, that today, the ability for us to have access to markets that we didn't have before can be bypassed by technology. So how do we make sure that we are retaining the best talent? The answer is always in the implicit motivators, which are definitely not just financial. So rethinking governance and rethinking board of director, rethinking incentive and dividends to support the for-purpose organization, I think is critical. And this is not just aspirational. Roughly in the world today, 10% of companies are already for purpose. They're just not called that way because we don't have a nomenclature for it. So it's not that we're talking about at the very beginning of an aspirational movement. We're talking about a grassroots movement, which is already in existence.
Okay, anybody want to add anything into that sort of stuff? Because one thing that Mark mentioned was how do we reward people? And if our bonuses are financial, we're going to influence behavior in that way. Is that something we need to look about if we want to create these progressive, modern digital businesses?
Look, REM's one of those difficult things, right? Which is, it's very hard to remunerate someone in a way that doesn't involve money.
Yeah.
That's as I've found out, most people care about making sure I've signed off payroll each month, right? That's my most important task. But I think finding a way that people understand that what you're trying to create is value over time. Let's be clear, that isn't new, right? If you go back even to triple bottom line, it carries different names over time, but at the end of the day, I think a lot of companies have wanted to do this. It is, I'll be honest, I think it's much harder when you're in a listed environment than an unlisted. And that's probably why you're finding a lot of startups and smaller companies have been very much at the forefront of this, because they haven't had to deal with some of the challenges that come from being listed. But I think for your people, finding ways that they can get value out of the organisation and working for the organisation that isn't just about what they get paid. And I'd say increasingly for the younger generation, that's almost a sort of a hygiene factor when they're coming to work. As a CFO, though, what you're going to have to do is work with the other parts of your business, particularly whoever's responsible for your HR or your people officer, because that is a very, very critical role.
Raz, I'm going to give you the final word. What
Yeah, I also agree that longer term view of organisations, harder for listed companies, but it is really important, because otherwise you end up getting suboptimal decisions in the short run to boost profits in the financial year rather than the long term. And I think the point that Mark made is about the importance of boards taking a broader stakeholder view. I think that's really important, because if the board set the management and reward them for longer term incentives, then that might change the behaviour, and then that'll filter through all the way down.